So, in this week's economic and market update, first of all, just so people know, there is no trading on Monday. It's Martin Luther King Day. But I want to talk about something really only one person and then a second person I'll bring up here in a minute have really talked about deflation. And I've been following this gentleman for a while. And I think he's probably going to wind up being right. But zero, I mean, shouldn't say zero. I saw a few people on Twitter when I looked it up talking about deflation being a potential problem now. So the first person is David Hunter, who I've talked about on here before. He's got a forecast out there that we're going to go past the all-time highs that we reached back around January or late last year for, say, SPY, NASDAQ, and the Dow Jones Industrial Average. We'll seek new highs and then have a melt up. And all of this to happen in the next 6 months. You have to remain skeptical. You follow price action if you're trading. But there are some signs that this may actually pan out and be what happens upcoming. And nobody, very few people are talking about it. In Hunter's case, David Hunter's case, he's talked about that there's this over tightening, how quickly the Fed ratcheted up the federal funds rate. And now, with $31 trillion in debt, a deflation is on the table. And the second person is, and you'll take a look here, is Elon Musk. Said this and said, Elon Musk says deflation is already here, our top picks. So he has caught on to this now. And so deflation, folks, after all of the talk and everything about inflation. Now, if I go to Peter Schiff, I'm sure he's still in the inflation camp. And I believe that it will return to that at some point. But this may be the fuel for the bust that we've all been talking about. I've had some of my personal philosophy around this deflationary thing happening, but been very skeptical at the same time. But the table is being laid right now. So start thinking in terms of deflation and, prices falling. And you hit deflation starts hitting the Fed's ears, their ears will perk up incredibly fast. And if that happens, you will see the Fed reverse course, start reversing on the Fed funds rate and start up quantitative easing. And if David Hunter is correct and this thing does wind up blowing up, because of the over tightening too much too fast. I've compared this to, if I had an oven that went to 1,000 degrees, the Fed has in essence done that. So I'm going to cook a turkey, put it in instead of, I don't know what the normal temperature is, probably 350 or 400. I'm going to cook it faster. We're going to really go after it and put it up to 1,000 degrees. We all know what the outcome is. That turkey is going to get burnt to a crisp. And if you're not aware of these things and tracking what's going on, you're going to be the turkey. I mean, that's the bottom line. All right, let's take a look at some of the things where things stand right now. Investor sentiment. The AAII Investor Sentiment Survey has been ratcheting down over the past few weeks from 52.3% to now 39.9%, and still above historical averages of 31.1%. And, the people, bullish folks still are in kind of the 20 to 24% area. And so that is where that stands at the moment. The fear and greed index, let it paint. Okay, there we go. 63 on the into greed now. We've been running something much worse. Hi, Brian Cranston. As far as the greed goes, I don't like to see that because I'd rather things be in fear. I like to take advantage of that. It's been there for a while, and we'll take a look at the put call index also as kind of one way gauging where things are. But people are getting greedy now. You can see some of when you look at some of the market measures, you'll see why. Economic calendar. Let's look at this past week. We have Powell. He was giving a speech, but it was overseas, so he didn't really talk about the U.S. In any specificity at all, which not even generally, really. It was kind of a nothing burger. And then Wednesday, we had the 30-year mortgage rate, which has been ticking up a little bit. It dropped back down to what it was a couple of weeks ago to 6.42%. And I anticipate that continuing to drop over a period of time here. We'll keep track of it. Because it's it's important like the 10-year, but the 10-year, it will influence where this goes, the 10-year Treasury. Let's see. We also had the CPI came out. And again, it's one of those things. The consensus was relatively low at 6.5%. And it hit the number. We hit the consensus. So really the market, which I thought would move one way or another, based on CPI, and it did not. And so I had some straddles that didn't work out very well, but I didn't have that much in it. I like to play it. But at 6.5%, you can see, another 0.6% down. So here it goes. And may fit, again, the deflationary bus narrative. Let's see, what else do we have here? We also have the Michigan consumer sentiment came out today, and the consumer continues to remain positive, and up at 64.6%. And I think that a lot has to do with the low unemployment rate. Just a personal opinion. As long as you have a job, you can pay your bills. Then let's take a look at what we got coming up next week. Okay, we'll take a look again. We just keep track weekly here on what the mortgage rate's doing. PPI, Producer Price Index, comes in next week. It's supposed to be, they're looking for, be looking for consensus that it falls by 0.1%. We'll see what happens. Last month it was 0.3%. It increased. We start to see decreases in the Producer Price Index. That will drive prices lower. Retail sales. It really was the first time last month that we saw retail sales start to decline. And we'll see. The expectation is the consensus goes down by 0.8%. And, if it comes out something either up or down from there, it's obviously going to have an impact on what the markets, if it's significant. And then we have building permits on Thursday. We saw a decline, continue to see a decline. Expectation is 1.37. I would be shocked if it's that high, that low. I think it'll be lower, than 1.37. I'm looking at maybe 1.3 and under for the building permits. And again, these are all things that will impact some of the thought of the Fed and what they're going to do. And then you got a whole series of speeches here, and I'd be curious to see if any of these speeches. There's one on Tuesday. Obviously, I mentioned earlier that Monday the markets are closed, but Williams speaks from the Fed. Who else we got? Bullard speaking on Wednesday. Harker, Logan, all on Wednesday. We have Brainerd and Williams again on Thursday. And then we got Harker on Friday again, and Waller on Friday. I'm just curious to see, there are things to listen to see if their tone changes any for what their thoughts are, and if they even talk about something like deflation. Be interesting to see what happens next week with regards to some of those speeches. Now, if we look at some of the market measures. The Dow Jones, it's already kind of lifted itself back. We're not really that far off of the all-time high of 36,900 plus. And, we're sitting at 34.3. It's a couple thousand up. Sometimes the market moves, that much, in a day. So it's within reach of surpassing that number. But the thing I'm really watching is the SPY. And, I'm not trading it quite as much. I'm trying to get my mentality out of the technology area. But, if it's going to recover, it's going to recover. But the first thing it has to do is you can see this downward sloping line on this daily chart going back to the beginning of January all the way through. We had one pop up here back, when was that? December. Now it's eventually going to break this. I don't know when. It did today, and I want to show you something that's kind of funny to see. Here's where it broke. It broke today, Friday the 13th, at about 3:29 this afternoon. Cleared it, got a double top up here, went all the way back down, and I thought maybe it would break below, and then now it stayed above that line. But you can see it used this resistance here. I kept thinking, okay, I wonder how good this line is, and it kind of bounced off it. Broke through it, and then I thought, okay, well, it's probably going to break down a little bit, and didn't. It held, and so we have our first close above the downward trend line that we see here. So this actually did close above. That's a thick line. That's why it's kind of covering it up. But it's staying there, and post it dipped down below the trend line, the downward trend line, but now it's back up. Now what would be good is if we start to see some confirmation on this, if you're a bull anyway, and then it hits and bounces back off of this trend line and then continues its way up. Now, could very well do the same thing it did here. This kind of impulsive move here, when I saw it, I had a sense that it would probably go back down. Now here, I don't know, it still could, and then go back up. But at some point, it's got to break it. And I think the timing may be right now for it to break it and start to make a move back up. And then we'd be looking at, first of all, probably 409-ish, and then up here around 431, hitting any of these. You'd like to see it clear the 410 here for, higher high. And then next go after this candlestick here at 430-ish, somewhere around in that 428, 430 marker on the SPY. 10-year Treasury. Again, it's respecting the lines. It's just kind of hanging out in between here. We recovered. It started its way down this morning and then recovered back. around 3.5%. Breaks below this 3.4% that it's been kissing off of here for last probably 3 or 4 weeks. Then we'll start to see the market react positively to those interest rates coming down, and especially tech stocks, right? Because they don't like the high interest rate. We look at the DXY. It has been in a mode of falling. We are down 102.18. I haven't really looked to see when the next, we might get a bottom here. I would look for around 101. But if it blows through that, then you're looking all the way down into the 90s there, around 98. Well, could hit here 99. I'm predicting 90 on the DXY for next year for a low. Could go a little lower. Crude making a little bit of a comeback this past week, but still, relatively low to where it was. Now, can it go back up? Sure. China's reopening. We've got a lot of things going on in global economics. It could drive the price back up. And then we get the VIX, and it has fallen off a cliff too, just like the DXY. I had this kind of little cone here working and waiting for it to break one way or another. It broke down 1834. Premiums are low on the options, and next stop here, we're probably at one right now. Looks like it might be bouncing off a little bit here, roughly around 1833, and then 1653. There's other places it can go, but that next stop would be probably the 1653 if it doesn't stop here. So the VIX is down. The put call ratio I talked about a little bit earlier. Remember we had that big spike? Well, it's starting to get down to about normal, which would be about 0.7. And it's still above that, so there's still more puts than calls out there. And that's really it for this week. I think the next 6 months are going to be, well, if you're someone who follows this like me, you probably will be very excited about watching how this thing pans out over the next few months. Will David Hunter's prediction come out? Is Musk right about deflation? As well as David Hunter, we're going to see this bust, and then you're really going to see a fire drill at the Fed. And that is really, if I'm going to have a post-market comment, that would be prepare for the fire drill at the Fed if we do have a deflationary bust here. And that Musk is seeing it, Hunter's seeing it, a few people on Twitter are seeing it. If just go to Twitter and type in, search on deflation, you'll see some interesting language and some people there that are like, nobody's seeing this. So anyway, that's what I wanted to cover this week. And remember, there is always a better way.